Alright, so I wanted to go over my closed trades for the month of May. So for the month of May, my P&L is 1156 US. So you can see that it dropped compared to April and definitely dropped compared to March. Now I already went through the other trades of May. I'm just gonna go through the last week of May because these are the trades that I don't have a video for already. So let me go through the trades and then I'm going to talk about my remaining open trades. And then I will talk about also some missed opportunities for this last week of May as well. Probably could have collected easily maybe another $700. All right, so the first two closed trades here, as you can see, they're put spreads on the Qs. So these are part of the put spreads that I try to open every Monday, Wednesday, Friday, especially if the Qs or the SPY have a red day. So this one had a 315, 310 strike. This one had a 305, 300. I ended up closing them together for about 70 cents, which gave me a combined profit of $74 net US. Now I probably could have closed it for less if I held on to it to maybe the end of the week. I opened the trade May 10 and May 17, and I closed it May 24th. I also closed the SPY here. I had a SPY put spread that I opened May 19th at a 385 strike. So that's pretty good. That's a pretty good entry because it's very far. And I had collected 70 cents, and I closed it for 21 cents on May 24th, so same day. So from these put spreads on basically ETFs that track the index, that's a combined profit of $110 US. And then I had a put spread on Beyond Meat that had opened May 3rd for earnings, maybe a few days before earnings, and Beyond Meat completely dropped after earnings. So this put spread was completely breached, but I was lucky. I rolled it before it dropped below 110. I rolled it, I believe, for 8 cents, an additional 8 cents. So, and then as you probably noticed, there was a short squeeze on Beyond Meat this week. So I was able to close the put spread for 25 cents. I could have probably gotten full profit, but I would have to wait all the way to June 18. So I decided to close it early for 25 cents, which gave me a net profit of 70 US. And then finally, Lemonade was sort of a similar situation. It dropped hard after earnings. I think I initially had an 80-85 put spread, I believe. I think it was an 80-75 put spread. I rolled it to a 75-70. So total profit or net credit received on this trade was $1, a penny, and then 25 cents, so $1.26. And I closed it this week for 45 cents, giving me a net profit of about 68 US. It could be a little bit less because when I rolled it, I had to pay commissions to roll, so it's probably $60 US net profit on this one. So for the week, for the final week of May, it's a combined profit of 248 US. Now, Monday, May 31st is still part of May, but the US market is closed, so I'm probably not going to be able to close anything in my positions. And the Canadian market is open. I only have a Bitcoin ETF that's on the Canadian Stock Exchange, but I'm most likely not going to do anything with it. I'm not going to close it or anything. So yeah, so for the month of May, I can confidently say that this is my P&L for the month of May. What's actually good is I'm not in that much trouble anymore with my remaining positions compared to back in April. So I've got a cover call here on Luminar. It's not so bad. I mean, the stock's trading at 21, but I saw it trade at 25 at some point, but then drop back to 21. Fubo. So Fubo, I actually had a chance to close it this week for a $300 US profit, but max profit on it is $500 all the way to June 18. So I decided to hold on to it to try to squeeze the extra $200. But if I wanted, I could have closed it for $300 profit, and then that would have brought my P&L to maybe $1,400 for May. This one as well, I had a chance to close it for $200 profit. I didn't because I feel like I can squeeze more premium out of it, so I held on to it. So that could have been an extra 200, so an extra 500 with Fubo. And then I've got HIMS covered call here. HIMS is trading above my strike, so that's fine. I'm going to end up losing my shares at 12.5, but that's okay. I just want to save this trade, so I'm okay with not making that much profit on it. And then I've got Skills here, covered call on Skills, which is okay. I think the stock's trading at around 15. And I've got a covered call on LI here, which will be profitable by June 18 because the stock is trading above my strike. So I'll be able to close it for 22.5 since my net entry was 20. So that's a $200, $250 profit right there. I've got this put spread here on now. So this one is borderline. So I'm not sure if it's going to be profitable, but it's safe right now. I mean, it's out of the money, but it could easily drop if there's like another tech sell-off between now and June 18. I've got a Teladoc, same position as now here. It's out of the money, but it could easily drop as well. I think it's trading in the 150s. Here, let's look up the stock here. TDOC. It's trading, yeah, 150.58. So it's 58 cents out of the money. But at some point, I mean, the high of Friday was 156. So yeah, I mean, who knows what's gonna happen? But it looks safe. This one's not doing good, but I mean, it's not a big trade. This one's not doing good at all. Etsy, I believe, is at 165. Here, let's look up Etsy. ETSY. So Etsy's at 164, yeah, and my put spread's at 180, 175. So this one's gonna require some management. I might roll it as another put spread, but I'll add a contract. So that'll probably be the way that I'll manage this put spread. This open covered call is doing good, so should be profitable as well. So about $100 over here. This covered call on Virgin Galactic is doing well as well, so should be $300 profit here as well. But I rolled it to July, so this one's gonna take a while to confirm the profit. But yeah, it's doing well right now. Rocket is okay. I mean, the stock dropped to 16, 17, but it's back up to 19. So it's not profitable yet, but it's not in a really bad position. This Bitcoin ETF, I've bought it at I've got a net entry at 565 because I sold a covered call at an 8 strike, collected $1 from it. It's not bad. It's slightly profitable. So remember these two, these were earning plays that got completely breached and I had to roll several times. So they're finally, I think Twitter is out of the money. And actually Twitter is a 57.5 strike. I didn't update it. And Pins is almost out of the money, but it's definitely doing better and I'm not as worried about them as I was before. I've got a naked put on AI here. Now it has earnings next week, so that could be problematic. Hopefully it jumps up after earnings. But my short strike is 60. I collected a net credit of $2.85. So my break even is about 57. And the stock is out of the money right now, but with earnings, it could drop easily 20%. It's 61.71 right now. So yeah, it's right now it's doing fine, but it could be problematic. We'll see next week. This one's a pretty bad position, but it's not a big trade. So Spotify, if you remember Spotify, this was my worst position. I mean, it was completely in the money. I have a 250 put, and the stock was trading at 214 at some point. But as you can see now, at this point when it was trading here, that was very problematic. But now it's back up to 241. So I'm only 9 points out of the money, so it's not bad. But my expiry though, sadly, my expiry is far, so it's July 16. So I have to wait all the way till July 16 to be able to close this or confirm the profit. Then I've got a Wish covered call here. This one's pretty bad. This one's pretty bad as well. So I guess all the ones with the far expiries are bad. So November and December expiry. These ones I just had to roll to save it. So yeah, these ones are all in bad position, but I still have until November and December, so I'm not too. It's not stressing me out, that's for sure. And as for the ones that have a near-term expiry, they're doing better. Some of them are actually almost closable for profit, as I mentioned with Fubo and GHVI. So let me go over the missed opportunities of last week. I'll show you right now. So this was earnings last week, the earnings calendar, and initially just at the beginning of the week, without even going through the week, the stocks that I wanted to play was, I wanted to play Intuit. I always play the put side. I don't pick a direction. I just always play the put side regardless. So I wanted to do a put spread on Intuit, put spread on ZS. I wanted to do a put spread as well on Nvidia, on Snowflake, on Okta. I wanted to play a naked put on Best Buy. I actually had an order on Ulta Beauty, but it didn't fill. And I think that's it. So actually there's a third one here, but it's not showing on the calendar, but I don't remember what it was. But with ZS, I wanted to play a different stock as well, but it's not written on this calendar. I don't remember. So I had about 1, 2, 3, 4, 5, 6, 7. So 7 trades. 7 trades that I didn't play, that I missed out on, and 6 of them would have been profitable. So let's say after closing and with commissions, let's say I would have made $80 on each. So 80 times 6, that's $480. So that's easily $480 that I missed out on just by not playing earnings. Why did I not play them? Because sometimes I just don't feel like dealing with the stress of managing a breached trade. Sometimes I have confidence, sometimes I just don't feel like it. But I always go with put spreads, and that week, as you can see, 6 out of 7 would have been winners. Only Okta here I would have had to manage because this one dropped hard after earnings. So most likely my put spread would have been breached. I probably would have had to roll it maybe all the way to November or something. I don't know how I would have saved it, but yeah. So this was the only one that would have been problematic, but I would not have confirmed the loss. I would have just rolled it. Otherwise, all the other ones that I had the intention of playing and I didn't play were winners. So that's easily almost $500 of missed opportunity right there, just for not pulling the trigger. And Ulta, I did end up pulling the trigger, but it didn't fill. So I got picky on my price, picky on my entry. So that didn't fill and I missed out. All right, so these were my trades for the last week of May. And you can watch my previous videos to see the other weeks of May. So if you have any questions, leave in the comment section below. Now, if you want to join the Trade Alerts group where I send these trades live as soon as I place them via WhatsApp, it's $25 a month. Link is in the description below. And I send basically all these trades here as soon as I place them. And it's mostly naked puts and put spreads and covered calls, really nothing else. And like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.